Thanks for having me here tonight. As it was said, I'm Brady Dale, a reporter who covers crypto. Oh, I forgot to bring my copy of my book up, but Sarah left one here for me, so that's great. Yeah, this is my book. So, I just want to say, I'm looking for my notes in my notebook here. All right, cool. So, I'm really mellow about speaking in front of folks, so I plan to talk about some pretty weird stuff tonight. Feel free to just like stop and ask questions as they just come to you. Just like I'm not following this right now. I don't mind. I'm fine with it. So I'm happy for this to be like kind of a back and forth sort of thing. I am sort of assuming that everyone knows that this, the basic story, right? There's this cryptocurrency market out there in the world. This young guy became ridiculously wealthy. He was on the cover of all these magazines. Everyone thought he was the greatest thing since sliced bread. And then one day in November, it all came crashing down super hard to the surprise of basically everyone. And people who say they weren't surprised are probably lying, though some of them knew. I was surprised, I'll tell you that. I was super surprised. And then it turns out that several $1 billion, we're still sorting out exactly how much, but probably like $8 billion was gone. And now this guy who was going to save the world and end malaria and whatever is in a jail just across the river. So yeah, I assume everyone sort of like knows the broad amount of that story. So I'm going to tell some chunks of stories in the book. I'm happy to veer off in the directions that folks are interested in veering off into. But since this is an alternative investing group, I want to talk about kind of a middle part of the story, which is the one that is kind of my favorite piece and really isn't about Sam doing anything wrong. It's actually a part of the story where Sam is behaving kind of well. But before I do that, I think it makes sense because, this is a thing about a book to like read a little bit of the book. So I'm going to read to you my introduction to the book. And I'll give you a little bit of a flavor for like what it's like and sort of like where I'm going. And I guess the thing I would say, you've all got it, I hope you read it. What this book is, it's the first book that came out about Sam and the collapse. It was written really fast because Wiley, my publisher, came to me with the idea to do the book, and they wanted to be the first book on the market. We already knew at that point that Michael Lewis was doing a book. There's another book that's coming out the same day as Michael Lewis's. They wanted to beat him. So what this book is and what it isn't. What it is an account of everything that we know about Sam in sort of hopefully an engaging format. It also is a book that if you don't know a lot about the world of cryptocurrency and why it works and what makes it tick, it kind of attempts to answer some of those questions and make it make sense. So there's a lot of explanation of things along the way, and that was sort of my intent in doing it. I think it's kind of funny and light. That's also sort of the goal, but it's not a book if you want to learn more about the polycule or whatever, or like the weird parties that Sam had, or like the insider scoop of what it was like at Alameda Research. That's not really in here. That'll probably be more in Michael Lewis's book because he actually was like hanging out with them. This is a lot more macro, but I think if you want to understand a sector which I expect is going to come roaring back again sometime in the next few years and will be more significant that time than it was this last time, much like the internet was, in the late 90s and then later in the 2000s. I think this book will get you a long way down the road. But anyway, let me read you the intro, which is only a couple pages long. I have to preface the intro when I read to people because there's a weird part about it, which is not at all weird when you're reading it, but you can't see it. So it opens with like a sort of a journal entry, which you can see that on the page because it's like all written in italics and stuff. But it's in present tense on what was the date? How I was feeling on December 1st, 2022 as I was writing this book. So about a month after FTX had fallen apart. And then it actually sort of is like an actual book. So it starts with that journal entry and then it becomes like a real intro. And you'll know the journal entry's over when I say the date. All right, so the chapter 1, I want to believe. I am drowning in Sam. He's everywhere, and unlike any other CEO after a comparably colossal unwinding, he's not coming at me directly by a journalist searching his history. No, this deluge is him. He won't stop. It's as if he can't stop. I want to get the story of FTX down, but how can anyone discern it through all the noise that is him, that is Sam Bankman-Fried, that is SBF, that nasally, excessively informed voice that just won't stop offering his version of events in his extra-qualified, statistically tinted mysticism. These words are coming to you from somewhere around the halfway point of writing this book. It's December 1st, 2022. Tonight, as my workday at Axios, the internet native news site, was ending, I was trying to make some time to do a little bit of research on companies that one of his companies, Alameda Research, is backed. But then I got a message on our Slack that SBF, the boy wonder who lost several $1 billion in crypto wealth, was doing a Twitter Spaces. For those blessedly adrift from the gravity of Twitter, Spaces are where a few people can go online and talk with each other, no video, just voice, while dozens or hundreds or thousands of others just listen, interacting with a few emoji. Spaces have become a big way for big accounts to broadcast, and SBF, since late November and here in early December 22, was all about broadcasting. This was after SBF had made a morning show appearance with George Stephanopoulos, which I haven't yet watched, after a New York Times internet broadcast with Andrew Ross Sorkin, which I also haven't watched yet. I'm the only person I know in the media who hasn't watched it. I'm too busy writing this book to watch a thing I knew would be there later when I was ready. I plan to watch it later, but now he is talking again to some random faux investigators on Twitter in a wannabe Barbara Walters grilling I just have the misfortune of hearing. I listened to a little of the Spaces, but it was more aggravation than information. There was too much of him. I'm drowning. Sam will not stop coming. People say this deluge is the masterpiece of public relations plotted out by warlock-level flacks inducted into issue-controlled dark arts, but this view comes from mere witnesses of PR, perhaps its clients. This was not PR. PR is the sandstorm in which I have built my home. It's pointless pellets of banal sameness, a maelstrom in which I have to inhale a few breaths of trustworthy observations. PR has a taste and a smell of risk aversion. What SBF was doing was not that. This was him. This torrent sprung from his need. This was all Sam. So much Sam. I am drowning in Sam. December 1st, 2022. Sam Bankman-Fried offered a story that you wanted to believe. The talkative boy billionaire would turn the wealth creation engine of cryptocurrency into a robber baron's war chest with which he could fix the world. He would be like the Andrew Carnegie with his libraries. And who doesn't like those libraries? There was one in my tiny little hometown in southeast Kansas. It's beautiful. But Andrew Carnegie paid for those libraries in part by, for example, hiring thugs to bust unionized workers trying to negotiate a better contract. Not great stuff as it goes. Some of our grandparents paid for those libraries and lost wages. But SBF wouldn't spin up a war chest from anything nasty like air pollution belching factories and life-threatening working conditions. SBF's war chest would be created off the internet, scratching wealth off like solid gold paint flecks from space money bouncing around something called a blockchain. Far from creating industrial scars in people's backyards, blockchains don't even seem real. So if a good guy could come along and make his wealth off that, then help a whole lot of people with that money, where could the harm be? It was an appealing way to see SBF. A lot of people got sucked into it. I got sucked into it. I believe that he believed the story he was telling. Bonnie Tyler sang it out in 1984, and we all feel today just as she did then. We're all holding out for a hero. Let me ask you this question. What if we are all, in fact, better off for the fact that SBF never got a chance to take a crack at really going to town saving the world? What if he was the very last hero anyone needed? What if, in fact, the lesson of SBF is this: the last thing anyone needs is a hero? All right. So that's how it starts, and that's also kind of how it ends. So when we can kind of talk about that a little bit later. But I guess for today's talk, I think what I want to do is tell a little bit of the story of the book, and then kind of walk through, like I said, what I think is sort of my favorite part of the book. And here's why. So the way this book came about was obviously, well, FTX grew up. That was a big part of it. And then Wiley came to me and they were looking for someone who could write a book about SBF and do it quickly. And they were like, it was mid-November at that point. and they were like, do you want to do a book about SBF? And I was like, sure, why not? And they said, do you think you could turn it in by the end of the year, by December, November? And I was like, I don't know if I can do that, but I'm happy to give it a shot. And so that's what I did. And as it happened, it worked out sort of well for me, because when people find out that I wrote the book that quickly, the question they always ask me is, were you already working on it? And the answer is no, sort of. I had an idea for a book already that I had done I'd done a decent amount of work on. And I had written a book proposal for it. For folks who don't know how book proposals work, it's a decent amount that goes into those. It's kind of like writing a mini book. And that proposal actually did concern a piece of the SBF story. It wasn't a book about SBF, but he was in it. And I think it's a really important part of the overall story. So that's kind of the story that I want to tell you about tonight. And I'm pretty sure, I feel pretty safe as a bet that this is a piece of the SBF story that this room doesn't know. And it's really, really weird. Here's the story. So everyone knows that in 2021, that is when cryptocurrency started to have its latest bull run, which culminated in November 2020, which culminated in November of that year. It was when Bitcoin hit its all-time high at 69,000. It was early 2021 when it really started to go. It was just before the Coinbase IPO. It happened at the period in which you all started to hear the term NFTs, non-fungible tokens, right? Like that's what kicked the last bull run off. But it really, for those of us who were, deeply in the industry, and I don't really invest in cryptocurrency, but I report on it. I've sort of made my bet on it as a journalist. For those of us who've been around for a while, the boom really kind of started a year before that, before anyone started about it. In this sort of mini boom that happened, that was called decentralized finance, or DeFi. And this time period, it's now referred to as DeFi summer. And DeFi summer was, a really exciting moment for me as a journalist. I had been, covering cryptocurrency. We're kind of in a boring time right now. It's like things get really exciting and then things get pretty boring for a long time, and then they get really exciting again. And DeFi summer was the first time I sort of felt like things were interesting again, after a couple of years of it being pretty dull after, Bitcoin fell apart in late 2017. And so here's what happened, and it gets to Sam towards the end. So there was this DeFi product. So this is a room that knows finance. What's one of the most fundamental financial things that people do? They lend money. People put up some collateral and they borrow money against it, right? One of the most basic financial products. All right, so in late 2018, I had written about the launch of this startup that was creating a smart contract that's called Compound. And so Compound was a product that exists on the Ethereum blockchain. Ethereum was the first blockchain that allowed people to autonomously run complex software on a blockchain. And what that means, just to back up a little bit, is, and this is, I think, one of the things that is one of the hardest things to understand about how things work in the crypto world. Until blockchains came along, every service that you ever got provided by anyone, there was a person involved somehow. There was a company, there was somebody who you could call if something went wrong. What blockchains enabled is a world in which services could be created that could function with nobody involved. Really no one. Like, no joke. No one. And the way it usually works is some startup will launch to make one of these services, and the startup will run for a while. Maybe it's still running now. But the thing that's hard to sort of grab about these things when you're used to the world as it is the startup could shut down like today. It could go away. It could, everyone could be, thrown in jail somewhere, and that service would still just run forever, as long as it exists on one of these blockchains. And the way, in a lot of the ways they get published, you can't erase them. So this service, Compound, it was a basic money market built on the blockchain. It just said, you can come in and you can drop some assets into one of our smart contracts. Say it's $1 million worth of some asset, right? And if you do that, we'll pay you a certain interest rate determined by the market for putting that in there. And you can just do that. You can just provide collateral for other people to borrow if that's what you want to do. But if you've got something you want to do, you can borrow some money against that and do something else. And of course, you'll pay a rate for doing that. And interest will accrue over time and blah, blah, you pay it off and you get your assets back, whatever. But that all just occurs autonomously on a blockchain. That was Compound. And if this is interesting to folks, one of the reasons why this was really appealing to people back in 2018 was, there was a lot of people who had made a lot of money because they had invested in Ethereum early, they had ETH, they were ETH rich and cash poor. So you might be a multimillionaire in terms of ETH, but you just had a normal workaday job. You were earning $70,000 a year as a developer, but you had all this money, and you thought your ETH was going to be worth way more over time. But some other token was coming out that you thought was cool. You wanted to make a bet on it, but you didn't want to sell your ETH because you believed it was going to keep going higher and higher. So what Compound enabled you to do is you could just drop that ETH in there, borrow some money against it, and then make whatever bet you wanted to make. And if it paid out, cash out, pay the loan off, get whatever amount of your ETH back. So this was it was a real basic service, right? So this runs along for a while. People like it. It's good. In, I think it was February 2021, there's this website called DeFi Pulse. It's keeping track of all the money that people have dropped into these various services. And in February 2021, we're all very excited. I did a story about it. I was just like, whoa, this is so crazy. $1 billion had been accumulated in all these various DeFi services. It was the first time that much money had been built up. It was like, whoa, $1 billion. It's wild. And so a little while after that, the guy who founded Compound, his name's Robert Leshner, really cool guy. He and I have a decent relationship. He likes to come to me to release news. And so he's like, Brady, I got a great story for you. I want you to write about it. I want you to be the guy to have the story. And I was like, all right, cool. And I was like, what's the story, Robert? And he's like, well, we're going to decentralize Compound. And decentralization is one of the big buzzwords in crypto. And I was like, what does that mean? He's like, we're going to turn Compound over to its users. And I was like, okay. And I was like, how are you going to do that? He's like, we're going to make a new token. And we're going to start giving this token to everybody who uses Compound for a 4-year period. And if you have this token, you're going to have a vote on how Compound works, if it changes, what the rates are and things, like blah, blah, blah. And I was like, oh, so it's kind of like equity. He's like, yeah, it's kind of like equity, I guess, whatever. But we're going to create this token. It's a really hot story. And I was just like, sounds kind of boring. But, okay, I'll write it up. So he announces this in like February of that year. It comes out in June. It launches in June. And then people start earning this Compound token. It's called Comp. For all their deposits. If you've got some money deposited in Compound, you get a proportional amount of sort of the daily emission of this new Comp token. You also get some money if you've borrowed on it. So if you've both deposited and borrowed, you get Comp on both sides. This gets people very excited. I remember as this token was coming out, there was this idea, I don't even know how I got this idea, but I was like, the idea was the reasonable price for Comp was probably like something like $40 a token. Somehow I believe that was true. And so I wrote about it, Comp comes out, and as soon as Comp comes out, money just starts piling into Compound, just like crazy. It's like people are just dumping cash into it to get this Comp token at just enormous rates. And Comp's value rapidly moves up to like $300 a token. Like, almost 10x what I, for whatever reason, thought was reasonable, right? And all of these additional things start happening because of this. All these other businesses start taking off. People are sort of pulling these crazy machinations to maximize the amount of Comp they're getting. It gets really wild. And that's that moment when the Comp token launches is the beginning of DeFi summer, okay? So, obviously what happens when a startup is successful in something, other people start copying it. So lots of other people start making up tokens for things. You might have heard this term, I don't know. Liquidity mining, that's what this was. If you drop some money into a thing and it has a token, you get this additional token on top of it, right? So liquidity mining is what got people very excited about DeFi summer. Okay, so another application that exists on the Ethereum blockchain, and this is where it starts to get really, if that's not weird enough, it's gonna get a lot weirder, is Uniswap. And so Uniswap is this decentralized exchange. And we all know what an exchange is, but the way most exchanges work, right, is you go to an exchange, you're like, I've got this thing and I want to sell it, and here's the price I want to sell it for, and you wait around until someone else wants to buy it at that price. That's how a basic exchange works. Okay, that's not how Uniswap works. The way Uniswap works is it's called an automated market maker. It just always has a buy and sell price for everything that's on it, and you are trading with it. And so it's a smart contract. It's got a bunch of stuff inside of it. The price for all the stuff inside of it is just the ratio of all the stuff inside of it. So if there's only two things in there, if there's like if there is one ETH and 1,000 of a stable coin that's worth $1 a piece, then an Ethereum is an ETH is worth $1,000, right? It's just but it's obviously much more complex than that. There's tons of things in there, but just all the prices are just the ratio of whatever's in there. That's just how it works. And so this is a very popular tool on the Ethereum blockchain because people just want to trade all the time. They want to go to different liquidity mining farms. They've got there's a lot of exciting things that are happening. And Uniswap is just where you go. Just like, well, I was trading this token and that was useful for this one thing I was doing. I'm done with that. I want to do something else. Pop over to Uniswap and get whatever you want. And just like you don't have to leave the blockchain. It's all just like right there. It is easily like it's the grand central station of cryptocurrency, in 2021 or 2020. And so, but the thing that Uniswap doesn't have, and Uniswap remains to this day, it's a very important tool in the crypto world. What Uniswap didn't have at that point, unlike Compound and everything else that had come along, is Uniswap didn't have a token. It was like, no, we're just going to be a public good. It's going to exist out there. We've got a company that's, trying to build it up. It's making new versions of it, but it sort of, it just thought the whole token thing was kind of weird, and they weren't into it. There's people in crypto who were sort of like of two minds with the whole token thing. They just hadn't done one. And this one crypto researcher, you can kind of call him a journalist, this guy at the block, Larry Cernak, just tweeted one day, because one of the things about the way cryptocurrency works in the crypto world is all of these things that people build, they all make their code open source in general. It's all just completely available online. Anyone can copy it anytime they want. And so that it's really easy to, sort of steal someone's work. There's various reasons why it's like hard to do that practically, but you can basically. And Larry just tweeted one day, he was like, what would happen if someone came along and just copied Uniswap's code and said, we're gonna make a version of Uniswap that just like has a token. And if you dump money into it, you earn that token as it goes. What would happen if someone did that? And people were just like, yeah, wow, that's a great idea. And some anonymous guy, no one knows who it was to this day. There's a lot of ideas about that. A few days later, said, I'm going to do that. And he went on Twitter. He called himself Chef Nomi, and he said, I'm going to launch an alternative to Uniswap. It's going to have a token. The token is going to be called Sushi, and the new exchange is SushiSwap. Okay. And so here's the really strange part. Well, there's a lot of strange parts, but when you put the way Uniswap works, the reason it has money to trade in it is people throw their assets in it. They entrust their assets to these smart contracts at whatever amount they want, and lots of people do this. And the more is in there, the better trading is on Uniswap. And this makes sense. It's like I said, it's just the ratios, right? So if there's larger amounts in there, then it's harder to change the ratio, and so you have less slippage when people trade. So there's a strong, people like it when there's lots and lots of money in there because that lowers the slippage rate, right? So people dump money into Uniswap to entrust it. People make trades, and every trade, like any other exchange, costs a little tiny bit of money. I think it was like 3 basis points. And those 3 basis points just go back to the pool. And so the more people trade on it, everybody who's in there gets a little bit more money. They're all earning off of those 3 basis points. The more money you have in there, the higher proportionally proportional piece of the trading pools that you get, right? And so so the way that that's accounted for, the way everything's accounted for in crypto is not like, there's not some database that has your name in it that says like you put this much money in there. When you throw money into it, a token comes back to your wallet that just says like this token represents your chunk of the pool. And you can send that to a different wallet, you can send it to a different person, you can hand someone that token and that's it's just a receipt, and it's a receipt that goes to anyone. There's no name, there's no KYC, there's no identity check on it. You just have this receipt that sits in your wallet, right? And so what the guy who created SushiSwap said was, listen, I'm gonna make this new exchange. It's gonna compete with Uniswap, and if you participate in it, you're gonna get the new sushi token that comes out. It's gonna take me 2 or 3 weeks to build it before it's ready. But in the meantime, I've set up this other smart contract over here that says, if you throw your receipts into this smart contract, that will allow me, when my new exchange is ready to be launched, to pull your funds over, I will give you tokens now ahead of time. I've already got the tokens ready to go. I'll give you those, and I'll give them to you at 10 times the rate that people will ever earn them going forward once the exchange launches, right? So typically, but right now in SushiSwap, I think it's like 100 sushi go out a day to everyone who's on SushiSwap. For that 2-week period, if you got in early, it was 1,000 SushiSwap a day. It was 10 times better than it was ever going to be in the future. And so a very crazy thing happened, and this is sort of the classic thing in crypto, is what that meant was people started to pile money into Uniswap in this insane way. So I don't remember the numbers, they're in the book, but it was something like $100 million or something that was in Uniswap at the time when this kicked off, and that was enough for the market. That was like what the market needed to function normally. It was going fine. There was like $100 million worth of crypto assets in Uniswap at the time. Within a few days after Chef Nomi made this announcement, there was like $2 or $3 billion that had piled into Uniswap because people just wanted to get this token, right? And so this is obviously very exciting for people, and so folks are earning tons of these sushi tokens, and a thing that was happening along the way is a little bit of the sushi that was being earned was piling up in a separate account into a thing called the dev pool, and all of these projects have something like a dev pool, and it's usually some chunk of their own assets that are just there to pay for developer teams going down the road. Because these things need to be updated, they need to be changed, they need to build new products to go alongside them. And so there was this dev pool that got to be worth like $10 or $15 million. And the dev pool was just sitting on the side, and this guy, Chef Nomi, was building SushiSwap up, and people were very excited about it. But then, unrelated to all of this, the value of ETH started to tank super hard, and that also meant the value of his sushi holdings started to tank super hard. And so he got nervous about that, and so he just suddenly sold all of the sushi that he'd built up and moved it over into his own wallet. And that made everybody flip out when that happened. In crypto, there's this thing, it's not clear that he was really trying to steal it. The story that he told was that he just was sort of preserving the community's funding. But in crypto, there's this idea of a rug pull that happens all the time. It's a frequent scam. Someone will come along and say that they're going to make something good, and people get excited about it, and they'll invest a bunch of money in it, and once people have invested enough money, the person will be like, actually, I'm not making anything, and just run off to, wherever. And because they're usually anonymous, no one knows who they are, there's no way to trace them, they can just get away with it and go. And so people instantly decided this was a rug pull, and they didn't trust Chef Nomi anymore, and they didn't want him building anything any longer, and he knew he kind of lost everyone's belief in him. And he still wanted SushiSwap to launch and to take off. And so he said, look, you guys don't trust me anymore. I'm going to turn this over to somebody else. Who would be a good person to take over this project and get it through the end? And that's when suddenly we all hear of this guy, Sam Bankman-Fried, for the first time. Sam was somebody who folks knew about in 2020. He was a presence. but he wasn't really a big deal. He wasn't, FTX existed. People knew what FTX was. I had looked at FTX a few times. They had this thing on. They had a product on the exchange called the shitcoin index, which I always thought was like kind of funny. Shitcoins is this crypto term for just like not very good tokens or like questionable tokens, things that aren't like Bitcoin. And some people like to bet on them. I thought it was funny. They just sort of like had that up front. That was the thing you could invest in. I'd never gotten around to investing in it. I hadn't really thought about it. But Sam was just like, look, I've got a big developer team. I can shepherd this thing through to the end. So if you guys will trust me, I'll take it over. And Chef Nomi was like, that sounds good. And he just turned the keys to his project over to this guy, Sam Bankman-Fried. And in fact, Sam and his team did a great job. And about $8 billion quietly crossed from one application to the other. And nobody lost any money, and nobody was screwed over. And SushiSwap is still running to this day, as is Uniswap. And the thing that I love about the story, the thing that made me excited to want to write something about it is people call this, the crypto world loves to come up with sort of evocative names for things. And the way people describe this, what SushiSwap did to Uniswap, was they called it vampire mining. Because you gave people an incentive to drop something into one protocol that you were competing with just so you could suck it out later, right? And that's what happened. So it was a vampire attack. But the thing that's great about the story is at the end of it, for a little while, SushiSwap was way bigger than Uniswap. But Uniswap was also bigger than it had ever been. Something about being attacked and this sort of like creative, conflicting moment happening had led to both of them being larger than they'd ever been before. Well, SushiSwap was just created, but Uniswap actually came out of it bigger than they were before the attack. And after that, it didn't take long. SushiSwap is fine. It's a good thing. It was never as good of a product as Uniswap was, and Uniswap was also a long way along at that point. I'm coming out with their next version, which was really good, and their third version was like really, really good. And so pretty quickly, Uniswap overtook SushiSwap again, but SushiSwap sort of was its own thing. Sam bows out. He's like, I've done my part. This is not really what I'm going to work on, and starts, doing other stuff. But that was the moment that Sam appeared in the world of crypto as not just, another business leader, but actually like kind of a leader in the space and had established himself as a trustworthy party. Like he had been given control over multiple billions of dollars of people's assets, and he'd stewarded it just fine. And everybody was happy with what he did, and he didn't steal anything, And so it looked like this was, a person that we could all trust. And so from then on, Sam kind of does what Sam does. Like, he goes on to launch a variety of his own decentralized finance projects. They all have tokens of their own. That's important to the Sam story at the end because that's sort of the basis of where a lot of his money is. He gets super involved with this blockchain that's called Solana. It's a super fast blockchain. It doesn't sort of adhere to crypto's essential values as much as other blockchains do. But he gets super involved in that. He generates a bunch of new tokens off of it. Whatever. There's this whole Sam coins part of the book that you'll see if you read it. My favorite part of Sam's story that happened right around then, and this was the moment that Sam really started to make me nervous, is in late 2020. FTX took a deal to buy the naming rights for the Miami Heat arena in Miami, Florida, right? And that was I think it was a $190 million deal, which sounds like a lot, but it was actually over 19 years. So it was just sort of a few $1 million a year. They didn't have to, they didn't pay it all up front. But I remember, and I never try to claim that I saw Sam's fraud ahead of time. I never tried to claim that. I was in disbelief up to the moment that it became incontrovertible that it was happening. But that was the moment in which I started to feel nervous about Sam for the first time, because I'm old enough that I remember the dot-com boom of of 1999 and 2000. I remember when I was living in Washington, D.C. at the time, I remember some random tech company, it's in the book, I can't remember their name right now, bought the naming rights to the Baltimore Ravens arena outside of D.C. And I was like, that's crazy. You're a company that's been around for like a month and a half, and you're buying a naming right for a stadium. And also around that time, Enron had bought a couple naming rights around the country, and that also fell apart. And I just had this idea, even then, I was like, new companies should not buy naming rights on stadiums. That's always a bad sign, you know? And I was like, Sam, it's so crazy you're buying the naming right for, you know, the Miami Heat arena. And he was on this podcast by a crypto news outlet called Decrypt. And they asked him, you know, why did you do that? Like, how can you afford to do that? And the quote he said to Decrypt in that podcast, it really stuck with me. He said, we can afford this deal even if FTX makes no money for the next 20 years. In other words, we've made so much money already, like we've done so well that we could just stop making money and we could still afford this. And I was like, that is the kind of talk that comes back and bites somebody someday. And that is the thought I had at that time. And it did come back and bite him much sooner than any of us thought it would. So yeah, let me talk for a second about what FTX was, and then let me talk about sort of my take on Sam and kind of like where I come down in the book. Because I think my view of the guy is a little bit different than kind of the standard take on it, and then we can open up. I don't know, where are we on? Are we on time? Okay, that's on? Good? Yeah, where are we?
20 minutes.
All right, what's that?
Yeah, 20 minutes.
Oh, great, okay, cool, perfect. So, okay. So let's do the diagnosis of the FTX situation, and then let's talk about the rest of it. I think the thing that isn't clear to folks who aren't, and the trial, maybe I'm wrong about this, but I'm pretty sure I'm not. The trial will make it clear if I am, but I don't think I'm wrong about this. The thing that I think what the Sam story looks like is this gigantic hustle that never made sense at any time, and a ton of people got suckered into, you know, backing this guy just because he was so unbelievably charming and told this great story. And I don't think that's right. I don't think that's right at all. It's actually a sadder and more disturbing story than that. The truth is, and I think this will be borne out in any number of ways in both the bankruptcy and the criminal trial. The truth is that FTX itself, whatever you think about cryptocurrency, you can completely set that aside. It really doesn't matter. FTX itself was a great business, a fantastic, stellar business that was literally printing money. Exchanges are super simple businesses, provided you can get users in the door. That's the hard part. But all an exchange is, once you have lots of people using it, is people dump a bunch of assets in there, they trade those assets, and every time they, and all they trade is the stuff that's in there already. You know, you don't have to deal with anything external. You're a closed, isolated system. If it's not in there, you can't trade it. But if it is in there and you trade it, you make a little money every time somebody makes a trade. And they're doing that thousands of times a minute. This is a fantastic, basically every time someone makes a trade, your business gets a little bit less risky because a little tiny bit of their money becomes your money, and then you've got that as a little insurance fund, you know? The hard part is getting lots of people in the door. But Sam had done that. They were the second most popular exchange in the entire world, right? And they were just gonna print money like that. They were making like 8 figures a month on into the future. There was no reason why they couldn't do that, right? So the fundamentals were not just fine, they were outstanding. It was like, why did anyone need more than that? The problem was that wasn't enough for Sam. Sam needed FTX to be the biggest thing in cryptocurrency in the world He needed it to overtake Binance, which is the other big exchange and was by far the market leader. And he needed to build up a gigantic war chest, and so he could fix the planet, right? So people often ask me, like, was his whole effective altruism story all just nonsense? Was it all just a con? Was he just a grifter all along? And I think a lot of people think that's what he was. I don't think that's true at all. I don't think it was a con, and actually I think it explains the whole story. In my mind, and I think all the evidence shows this, the fact that Sam wanted to build up a giant war chest and so that he could show the entire world that he was the smartest person in it by fixing it, better than anyone else could, is a part of what enabled him to take these outsized risks and a part of what enabled him to justify the fact that he was doing unethical things along the way. It was the classic story of someone believing that the ends justify the means. He wanted to be one of the biggest companies in the entire world with the most money that he could deploy so that he could do this tremendous amount of good around the world. And to me, I actually, when I say this, sometimes people think I'm defending Sam. I'm not. I actually think it's worse. The worst people in history are the ones who think they know what's best for everyone else and the ones who are willing to do unethical things to advance their vision of the world. And so to me, I would not be as condemnatory as someone who had done something like this and just wanted to make a pile of money, just wanted to be rich, just wanted to have an amazing apartment, overlooking Central Park. That's not who Sam was. Sam thought he understood the world better than everybody else, and that's what that's what enabled him to do these, unbelievably unethical things. So, I don't actually think it was a scam, and I actually think that makes it worse. And so I deal with that in more detail in the book. You should check that out when you do. But yeah, that's my take on Sam and the story. Happy to take any questions or comments. I don't worry. If you guys have just one thoughts you want to give, that's cool. I don't care. But yeah, happy to do any of that from here. So got one over here.
I have a question.
Yeah.
It's not exactly about SPF, but
okay.
Oh, I'm sorry. Hello. Valuation. I mean, the actual price of any of the thousands of cryptocurrencies.
Yes.
Besides whatever the next person is willing to pay, or greater fool theory, whatever you want to call it. How does one put any sort of price on any of them?
Oh, where does the price come from?
Yeah.
Well, I mean, as I understand it, it really is. I mean, by and large, the price really is just the last thing somebody paid for it. So I used to work at CoinDesk. CoinDesk, for those who don't know, is kind of the New York Times of crypto. It's the big crypto news site, the one that everybody else kind of follows. And one of their big products was the Bitcoin price index. And the Bitcoin price index is just sort of the industry standard for like what the price of Bitcoin is at any time. And the way they get the way they determine it, I mean, no one really knows exactly how it works. Even those of us inside don't know, but they're basically just pulling in all these data points of like, what did people pay for Bitcoin in the last, 30 seconds? And that's where that's where that price comes from. And that's, I told you about this whole story about Uniswap a minute ago, the decentralized exchange. A piece I didn't say, I could go into a lot more detail about that. I probably already, was weird enough at the level of it that I did. But a part of how Uniswap works is, like I said, the price on Uniswap is just whatever the ratio of the assets in it are, right? A part of what keeps it in line with the rest of the market is there's tons of traders out there who are just arbitraging prices across markets. And so the people who built Uniswap knew that anytime the price on Uniswap got, even a few basis points out of line with anywhere else in the market, somebody would just trade that away immediately. Like that's a part of the design. Like they would just come in and, and take that and then get it back in line. So, where the price comes from is just lots of people trading and making bets in the market, just sort of sorting them out like anything else.
Oh, but you said that about $1 billion went into SushiSwap? So
it was a few billion then. I don't know, it's like many billions now.
Where do you get that billion? Is that a dollar denomination?
Oh, that's all. So the billions it's a great question. It is all, some of it is actual dollars, like, stable coins, but most of it is, it's just the value of those assets,
the currently valued.
Yeah, exactly. Yeah. The spot value of like whatever's in there.
To put it in SushiSwap.
Yeah.
But not like, so your billion is kind of this amorphous terminology.
Oh yeah. Oh, totally. Yes, totally. It's very amorphous. It's total nonsense. It's just there's no better way to do it, right? So there's a whole chapter in the book called Market Caps. And spoiler on that, it says that market caps are nonsense, but market caps of everything is nonsense, right? Like the market cap of Apple is nonsense.
You have earnings, you have revenue, you have customers,
Sure.
you have retail, you have property.
You have a real company.
You have
Sure.
a real market. I mean, like
You do, but if I own so what's the market cap of Apple right now? It's like what, just under $1 trillion. So it's $2.5 trillion. Okay, so it's $200 trillion. Let's say I owned $500 million worth of Apple stock. Like, let's say I had that. Could I get that in a day? Like, I couldn't.
That's a different terminology. You're talking valuation, and you're conflating it with liquidity. The two are not the same.
Well, all right. I mean, fine. I guess that.
Markets.
I mean, I'm just talking about the way the way it's described in the market. But yeah, I agree. I mean, obviously those things don't have that real value if everyone sold it at once. But this is there's no better way to do it. I mean, this is sort of how these numbers are talked about. But yeah, that was the amount. That was the value of the assets that were the spot market value of the assets that were in SushiSwap
Let
and
me
Swap
ask you
at
a
that time.
question.
Yeah.
What is Coinbase? We have a liquid Coinbase because we were investors in Tiger's venture fund. We sold it because we always sell when we get stuff that's liquid. But in your mind, as someone who's much more experienced than I could ever be, and I think it's really interesting because I've listened to a lot of podcasts, and I see Ethereum as a platform that's quite interesting. I think it's really innovative. But what is the difference between, say, a Coinbase and a Binance?
Binance, yeah. What's the difference?
I'm sorry, in French, so.
It's all good. What's the difference?
Yeah, in your mind. It's really hard because I thought Coinbase was kind of an exchange.
Oh yeah, it is. Oh, they're the same thing on that
They are
level.
the same thing.
They're both exchanges. I mean, they offer certain products. I mean, I'm sure if there was anyone from Coinbase here, they would jump up and scream at me for saying that right now. The big difference, I mean, Coinbase is, I guess, the core difference between Coinbase and Binance really is from the moment Coinbase decided to be an exchange. It's not actually where it started, but the moment it decided to be an exchange, it decided it was going to be an American company that was going to do its best to follow all the
rules.
Yeah.
And they've done a pretty good job of that.
Well, yeah, there's a lot of, I mean, they would say there's tons of unwritten rules, and they'd love to have those rules written.
Clarified by the CFTC rather than the SEC, which
or whatever. They'd like to have rules. And so I think the core difference is Coinbase wants to be an American company, and it wants to follow American rules and function that way. And Binance is basically a stateless entity that is trying to just
stay decentralized.
Well, it's not at all. No. It is not. There is nothing decentralized about Binance. But it does sort of function this kind of, kind of anarchistic way. I mean, CZ would love to function as a stateless entity that kind of followed rules wherever it happens to be operating, but also just kind of exists everywhere. I mean, Binance is it's a quirky thing, but I guess the big difference is Coinbase wants to operate in America and follow American rules. Binance wants to operate everywhere and do whatever it needs to be everywhere.
And Sam, if I'm correct, pretended to want to be Coinbase, but located into the Bahamas where he could really be Binance.
Well, he was in Binance with this too. He was being a little bit of both.
Yeah, because he didn't want to follow rules.
But just to go to the question of the decentralization point is really crucial. So there is nothing decentralized about Binance, and Binance wouldn't even really pretend that there is. It is a centralized operation. It just functions on databases. Like it functions like any other Web 2 company that you might use for anything else. It's just about crypto. But there's no smart contracts. It doesn't, you could not, when I said earlier, for these other crypto entities, you could fire all the people and put them all in jail and it would still continue to operate. That is not at all true of Binance, and no one pretends that that's true of Binance. It's just like your bank. It's just like Facebook. It's just like TikTok. It's just a company that runs a service, and that service happens to be a cryptocurrency exchange. It's just that it functions in kind of a stateless way. Binance famously has no headquarters anywhere.
No country.
Yeah, no country, right? Which is really, really wild. So anyway, so we can talk more about it, but they are fundamentally, they're both just exchanges. Sorry, there was a question over here, I think, actually, if you don't mind, but I saw that before.
My question is, well, I need the mic, but
a lot of times in hedge fund land, the hedge fund manager has the majority of his net worth invested in his said fund.
Yeah.
You reporting on cryptocurrency, just curious why you aren't doing that.
Oh, because I'm not allowed.
Okay.
Yeah, it's just like any business reporter can't. You're not meant to. I would for sure. And other places I worked, I was allowed, and I had like a little bit. I always wanted to go mainstream, and so I never had that much. And now I'm basically entirely out. But it's just if you're covering GM, you can't have GM stock, or whatever. So most business reporters can only invest in mutual funds and stuff, and there's no real way to do that in crypto yet, and so. And it's too small of a market too, so that's why. My bet on crypto is just it's the thing that I cover, and I think that'll work out over time. So
I guess since that was a simple answer, what got you into reporting on cryptocurrencies?
The honest answer is I was a second career journalist, so I had a whole other career beforehand, and as an older person who was working in this field, a ton of people younger than me. It was kind of tricky, and the way I sort of stood out was I just always wrote about whatever was weird. I wrote about lots of weird technology stuff, and crypto is pretty weird. And I was working at this one outlet that I wasn't that happy at, and CoinDesk knocked on my door one day, and they were like, "Hey, you've written some stuff about initial coin offerings we don't think is bad. Do you want a job?" And I was like, "Any port in a storm, guys," and went there from then on. So and it's been great. I mean. It's been an exciting thing to cover, and I've seen a lot of weird things happen, so no regrets. Anyway, sorry.
So you talked about the divergence between Coinbase, Binance.
Yeah.
Two questions. I'll throw this one at you.
Okay.
Because I'm semi-versed in this. Is that Ripple?
Yeah. Well, Ripple is it is a whole other thing. Ripple, I don't even really know what Ripple's core business is these days, but Ripple is a company that was trying to use cryptocurrency to make international transactions, especially between large institutions, more efficient and better. I confess I'm not crazy about Ripple or it's any of the stuff it's produced, so I don't write about it a ton. But they famously made an asset called XRP, which is kind of one of the earlier crypto assets, which is maybe a part of how its business works, maybe it isn't, but certainly the people who run Ripple have this giant war chest of it, and kind of by virtue of being a very old cryptocurrency, they just are always able to have money because they have lots of XRP. But I don't know, what is Ripple? It's a company that thought there was a way with blockchains to make transactions between large banking institutions around the world more efficient, and it's not clear that has really taken off, but that's what they aim to do. And because they spun up this new cryptocurrency called XRP, they have a runway till the end of time. I don't know. Yeah, that's what Ripple is.
So, just some observations, which young lady over here said. So, I've got one observation, one question.
Sure.
As you cover the area. So, El Salvador and stablecoin.
Okay.
Have you followed that? And
Well, El Salvador, you mean El Salvador and Bitcoin is what you mean?
Yeah.
Yeah. Yeah, it's interesting. I don't know. This is one of the most interesting things that happened in crypto in the last few years. It's still playing out. Who knows what will happen? But El Salvador, for folks who don't know, was the first country that decided to make Bitcoin what's it called? Legal tender. So anyone who does a transaction in El Salvador, you've got to either accept their local currency or Bitcoin. The thing that I don't really have a stance on, I think it's interesting. I think if there's another bull run, I think we'll probably see some more countries do it. But my favorite thing to talk about with El Salvador, which is kind of a I don't know, it's not really what you're speaking to, but it's fun, is everyone knows that Bitcoin takes a lot of energy to produce, right? And there's all kinds of, I don't know, hyperbole about that out there. But one of the things I love about how Bitcoin works is it's the only way in which I used to do a ton of work in energy and things like that. And the thing that people don't really understand about energy is that energy isn't really actually a fungible good. Energy doesn't move very well. So if you produce energy in some place, the further away you want to use it, the more it's going to degrade by the time it gets there. You're going to lose a lot of it. And about a third of all the energy that we produce in the United States is just lost in transmission because we do these big centralized generators, and it gets lost being sent to people. Bitcoin is the only way to send electricity over the internet, which is kind of fun. And so what they're doing in El Salvador is El Salvador is energy rich in a way because they have all these volcanoes, but obviously people don't want to live near volcanoes, and so it isn't that useful of an energy source. But what you can do is build Bitcoin mines on top of the volcanoes, and then you can generate Bitcoin and send that somewhere that's safe, and that's what they're doing. So that's kind of fun. Like if you have some energy source that is not located well but is rich in energy, you can make Bitcoin there, and that's what a lot of people do, and then sell it anywhere in the world you want. So that's kind of a fun thing that's happening. Here's a question over here.
Oh yeah, no, this is a great topic. Brady, thank you for being here, and thanks for the roundtable putting this together. So just getting back to this whole bankruptcy, and you were saying before, and I just want to make sure it's.
I don't know that I did this list that well.
That's fine. We're not going about this, but it's a great topic. So just go back to Sam, and so the exchange worked, right? The exchange worked.
People loved it. And they're almost certainly going to relaunch it, right? Because it actually was a good product. Like, I mean, who knows? But it probably will be relaunched.
Right. So he made money on that, but I think what he did, and I think from what I'm hearing, is that he had this altruistic view, and he thought he could. It basically was it a Ponzi scheme, basically, in the sense that he just took money from other people, because he was losing money on his private fund space. Was that the whole bank?
It's not even clear that he was losing money. It's just that he
was taking from.
Yeah, he was. Yes, the core
taking custody.
The core. Yeah, I guess they talk about this. The core crime. What it seems, it's all alleged, but the really terrible thing that appears that Sam did is, like I said earlier, the way an exchange works is you drop various assets you have in there. You drop your stable coins, your Bitcoin, your Ethereum, whatever. Everyone does that. They all trade the stuff they have with each other, and you make a little money every time. But the core thing is, it's all other people's money. They're all just entrusting it to you, right? They're just trading it around, right? And sometimes you'll hear people compare an exchange to a bank. They'll be like, oh, it's like a bank. It's not at all like a bank. It's nothing like a bank. There should be no comparison there. A bank, you put deposits into, and they lend money out, and so there's less money there all the time than is what's deposited in it, because that's how they make money. They lend it out to their people, they do productive things with that pays money back. But so a bank almost never has even close to its deposits, right? An exchange, if it's working correctly, should have 100% of all deposits at all times. Like, that is how it should work. And that's a part of what makes this business easy, is they're just trading and all those deposits are there. Well, what Sam is alleged to have done is just been like, look, I know that on 99 days out of 100, I've got, I don't know what the number is, $14 billion worth of assets in here. Nobody ever withdraws more than $100 million in a day, right? So I kind of got $13 billion I can work with at any given time because there's no risk. And so he was using the money in all other kinds of ways, sort of assuming there would never be mass withdrawals. And then one day in November of 2022, people tried to withdraw $6 billion worth of assets, and it turned out it wasn't there.
That's what I was saying. Was it like a Ponzi scheme, right? In a certain degree, you get in early, you get it out, and then when the market starts going against you.
I don't think it was a Ponzi scheme. I think it was just a fraud. Like
He just stole the money, basically.
Yeah, he just took it. I mean, it's just like it wasn't like there was no deposit here and I'll pay you X amount over time if you just stick it in here. It was deposit here and you can trade it, and that's your thing. That's our business, is you can just trade it. But there wasn't some promise of some return put in there. It was just like the way we're supposed to function is you stick it in here and you can trade all you want. And when you want to take it out, it'll all be there because 100% of the assets are always there all the time, so we can always honor any withdrawal. But they didn't do that. So I don't think it was a Ponzi, I think it was just a fraud. That's, yeah.
It's beyond that. I just don't understand. It's a profitable business in a certain degree, right?
So profitable. It's like crazy. This is the thing that some people can't get over. It's just like, why was an 8-figure return not good enough for you? Yeah. But yeah, go for it.
Last question.
Sure, okay.
Back to the volcanoes and the health.
Yes.
We like it.
Wasn't there a small town that did a deal with crypto, and they supplied electricity from their small power plant and their small dam, and they went bankrupt because the electricity costs were so high they had to import electricity, and everybody in the town was paying 300 to 400% more for their own electricity.
I don't know that.
It was upstate New York.
Oh,
Yeah, near NYAIR.
I
that
don't
was
know that.
early on in the
That was early on, but a lot of people don't realize just how much electricity
No, it's
you
a crazy
need
amount.
to make a Bitcoin.
It's a crazy amount. I don't know that story. I wouldn't be surprised if it happened. That was a bad deal. On the flip side, one of the things that folks are pretty excited about with Bitcoin, and the thing I should say is before I was a journalist, what I was doing, I did a bunch of things, but the thing I did for the last 4 years before I was a journalist is I was an environmental advocate. I was working for a little organization in Pennsylvania called Clean Water Action, but we actually did a ton of stuff on energy. I got a pretty sophisticated sense of sort of how energy works in the world, and one of the things that you figure out about energy is that centralization is a real problem, and transmission is a real challenge. And this technology is really good at managing, sort of bringing multiple sources of things into a scenario in which can even be adversarial relationships, and help people sort that out in a way that works. And a great example of that, the volcanoes are a good example. Another good example is in Texas right now. Texas is the largest producer of sort of environmentally friendly energy in the country, by far. The problem is they're generating vastly more wind power than they can actually sell, because the places that you can put the turbines don't have any people in them. And so that's a problem. Well, it may not be a problem forever. And it might be, and that power is certainly useful to the state sometimes, because sometimes it does need that energy, even if a lot of it's lost in long transition, so it's all part of the grid. But what do you do with that excess power during the time in which people don't really need it, and it's too far away and it's not valuable to send it? Well, one thing that people are increasingly doing in Texas right now is they're using that power to run Bitcoin mines. And so there's a lot of problems in the energy market between mismatches of when supply is available and when people need it. And Bitcoin is stepping in to solve that problem in a lot of different places. And this is still being worked out, and there's a lot of things, and it doesn't always work perfectly. But there is this ongoing question of how do you fund alternative sources, and how do you smooth out supply in the way that you need it. And Bitcoin does seem to be at least somewhat helpful in doing that. I don't want to, there's some people in the Bitcoin world who act like it's this perfect panacea. That's not me. I'm not trying to say that. But there are instances in which it does seem to be helpful. But it is all about structuring deals correctly. And if that's a story, I don't know that story, but I can believe it.
It takes a lot of energy to produce a Bitcoin.
Sure, yeah.
How much energy does it take to maintain a Bitcoin?
There's no.
I mean, we're going to make one.
There's no maintaining.
And then, well.
store the data system.
There's no real maintaining it. It's an interesting thing. There's no real. I can explain how proof of work works, but there's no real maintaining of a Bitcoin. You do have to maintain the network, and the network will shift in size as people demand it. I don't think we should probably go into how proof of work works, because it's pretty head scratchy, and it took me several years before I felt like I understood it, which doesn't mean I couldn't explain it. But I guess I would just say that it takes a lot of energy to keep the network running, but it's not like once it's always the same amount. It doesn't really, like, as more people on it doesn't really matter. I don't know how to say it another way, but there's no maintaining of a Bitcoin. I guess I would say that. Yeah.
Except when you trade it.
Right. Well, yeah, sort of. I mean, it's gotta. Even if no one traded, you still have to produce. You'll still produce blocks anyways. It doesn't really change anything. Yeah. Anyway, sorry.
Susan has one more.
Okay.
So what do you think the outcome is for Sam? What do you think the result? If he, whatever it is he did or didn't do?
It looks pretty bad. I mean, I don't know. You know, I have a story coming out tomorrow about the defense that it seems to be preparing, which is the advice of counsel defense, which is sort of saying that he had attorneys who said that he was honoring what they said. But when $7 billion of your customers' money has sort of disappeared and no one can find it, and as soon as the state turns on you, 3 of the people that you built the company with turn state's evidence almost instantaneously. It's really hard to imagine a good outcome. But the thing that is curious about it is, for folks who I've talked to about these things, you know, they all say it's pretty wild that Sam didn't just plead guilty, because there is this idea of a trial tax. You know, if you commit a crime and you don't take a plea and you go to trial, usually the court will come down harder on you because you basically exhausted the court's resources when everyone knew you were guilty and like blah, blah, why did you do that? And so you'll get a worse sentence. And so the question is, there's one of 2 possible sort of ways of thinking about that. Either, 1, Sam thinks that the state thought what he was doing was so terrible that he was just going to go away for so long it didn't matter anyway, so he might as well fight it. So that's one thing that he might think. Or 2, and this is a thing that I introduced at the beginning of the book, and if there's one thing that being a journalist has taught me, it's this, and this is probably a good place to close, is sometimes you look at something that's happened and it's insane, and it seems like there could only be one explanation. And then once you dig into it and you spend some time on it, it's like the scales fall from your eyes and you realize that there was something that you just didn't see that made it wildly different. And so perhaps there is some piece of the story that Sam has that we all just don't know yet that does exonerate him. It's hard to imagine that, but I can tell you over my years as a journalist that I have had a number of situations in which I thought a thing was one way and it turned out it was wildly different, even though it seemed completely obvious at the beginning of the story. So who knows? But yeah, I don't think it looks good for Sam. There you go. All right, thanks everybody.
Thank you.